Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now, Ethereum is flashing a new signal in the short term, while the price is breaking out on much larger timeframes. And on top of that, Bitcoin is on track for the next major halving cycle, setting up a huge bull market, which I'll talk about in just a moment. So definitely stick around. First of all, just giving you a really quick update here on the weekly Bitcoin chart, and right now the price of Bitcoin is already attempting a breakout above this level of resistance, which is sitting at around $42,000. But at least for now, we have not yet seen a successful weekly candle close actually confirm above 42K, and so at least as of right now, this potential breakout above 42K has not yet been confirmed. But if we do end up confirming a breakout with weekly candle closes above 42K, or even better if we flip 42K into new support and bounce from that level. Either way, if we confirm that breakout, then the next significant level of resistance here on the weekly time frame is sitting at around $48,000 to $49,000 based on the Fibonacci retracement tool from all-time high down to bear market bottom. Of course, that places the 61.8% Fibonacci level, the golden pocket, at around 48 to 49,000, the most important Fibonacci level. And so once again, at least for now, we still need to actually confirm the breakout above 42K, but if that happens, once again, the next stop is at around 48,000. And obviously, as I've been saying since the very beginning of this year, once again, you can even go back on my videos back then and check, I'm still very bullish on the price of Bitcoin when it comes to the larger timeframes, like here on the weekly Bitcoin chart, for example. We are still clearly within a much larger bullish trend, forming higher lows and higher highs here on the weekly timeframe. And one of the reasons why I flipped so bullish near the beginning of this year and why I've been bullish this entire time on larger timeframes is due to the Bitcoin halving cycles. Because in case you're new to Bitcoin, basically every 4 years or every 210,000 Bitcoin blocks mined, which once again is roughly 4 years, we see the Bitcoin halving take place. And what the Bitcoin halving actually does is essentially halve Bitcoin's inflation rate. So essentially Bitcoin right now is still inflationary. There is still new Bitcoin being mined and added to the supply. But over time, less and less Bitcoin can be mined, obviously reaching that maximum supply limit of 21 million Bitcoin thanks to the Bitcoin halvings, reducing the amount that can be mined every 4 years. And of course, the Bitcoin miners out there have to sell some of that Bitcoin or even all of that Bitcoin in order to pay for their expenses, because of course they have high electricity costs, and also in order to pay for new mining rigs. And so what we usually see is Bitcoin miners are often net sellers of Bitcoin. They basically sell more Bitcoin than they would actually buy, because of course they're mining new Bitcoin and selling that Bitcoin to pay for their costs. And so basically you could think of Bitcoin miners as selling pressure for Bitcoin, basically putting a ceiling on the price of Bitcoin. So basically if the price of Bitcoin goes too high, then the Bitcoin miners that are just continuing to mine more Bitcoin every single day, of course they're continuing to sell that Bitcoin. And so if the Bitcoin price, for example, is at $100,000, then the Bitcoin miners every single day are selling millions and millions of dollars worth of Bitcoin, which means there needs to be millions and millions of dollars coming in to actually buy that Bitcoin to support the price of Bitcoin at that price level. But once again, the Bitcoin halvings actually halve the inflation rate of Bitcoin, half the new issuance coming into Bitcoin, which basically reduces the amount of Bitcoin that the miners can actually sell. And so basically the Bitcoin halvings significantly reduce sell pressure, and these cannot actually be priced in, because if we try to price in the halvings before they happen, then once again, as I just explained, if the price of Bitcoin runs too high before the halving, then the Bitcoin miners are still mining. For example, right now they're mining 6.25 BTC every Bitcoin block. And so if the Bitcoin price heads too high before the halving, then that's just too much selling pressure to keep the Bitcoin price at those much higher price levels. But after this next Bitcoin halving, which is happening in around April 2024, that reduces the amount of Bitcoin being mined per block from 6.25, which is right now, down to only 3.125 Bitcoin being mined per block. And so basically after this next Bitcoin halving, to have the same sell pressure applied to the market right now, which the market is supporting because of course the price of Bitcoin is going up, in order to have that same sell pressure, in order to keep the same price of Bitcoin, that same price equilibrium, basically the price would have to double in order to reach that new equilibrium, in order to meet that supply-demand equilibrium. But this also creates fear and greed cycles. Of course, the price of Bitcoin does get overheated near the tops of the bull market, and oversold near the bottoms of the bear markets, because of course during the bull market everyone is FOMOing into Bitcoin. We're hearing about it on the news, people getting squeezed out of their short positions, sending the price of Bitcoin much higher than it should be at that specific time. And so it basically corrects during the bear market, but then it overcorrects because a lot of long positions and exchanges and things like that collapse, get liquidated, sending the price a lot lower. There's also panic sellers selling the price a lot lower, which is why we get these decent recoveries before the halving, and then the real crazy bull market usually starts kicking in just after the Bitcoin halving in the 1 to 2 years following the Bitcoin halving. And right now, as of recording this video, we are roughly around 20 weeks out from the Bitcoin halving, which is represented by this green area on the chart right here. And as you can see in previous cycles, we were already trending in the bullish direction heading into the Bitcoin halving, with this one exception of a one-in-a-century black swan event, a pandemic, a global lockdown happening in 2020, obviously with that one exception which caused a crash temporarily in the markets. Other than that one black swan event in early 2020, of course, we were basically trending in the more bullish direction leading into the halving. We did have some short-term pullbacks along the way, but then after the halving, that is where the fireworks really started. And in terms of breaking the all-time high for Bitcoin, we usually also see that a few months or so after the Bitcoin halving, roughly around half a year or so after the Bitcoin halving in the last 2 cycles. And as for the Bitcoin bear markets, as you can see in these red zones, these are the Bitcoin bear markets, and they're basically perfectly programmed to happen right in between the Bitcoin halvings. Obviously, we had a 1-year bear market during 2014, a 1-year bear market during 2018, and a 1-year bear market during 2022, and we're likely going to see another 1-year bear market in around 2026. And so simply based on these Bitcoin halving cycles, we're likely going to be setting up for a major bull market over the next 1 to 2 years or so, with potentially the price of Bitcoin breaking out above its previous all-time high some point during 2024 after the Bitcoin halving. So perhaps later in 2024, we could be breaking out above the bull market high. But obviously, this is talking about the much larger moves in the market, not the short term. So obviously, we can still experience short-term pullbacks and things like that. But on the much larger timeframes, I'm still currently very bullish. But anyway, taking a look at the daily Bitcoin chart, and of course, we are potentially still forming a possible bearish divergence here on the daily timeframe, because at least for now, we still have higher highs in the price of Bitcoin and lower highs in the RSI. But as I've said in recent videos here on the channel, this potential bearish divergence is not yet confirmed, because of course if the price of Bitcoin just continues this pump as it has been doing recently, then this can pull the RSI on the daily time frame further to the upside, and if the RSI breaks into higher highs, then obviously higher highs in the RSI alongside higher highs in the price means no bearish divergence. So at least for now, once again, this is potentially forming, but it is not yet confirmed. And so overall, we are still looking more bullish than bearish. Of course, we have not yet broken the bullish price structure, forming higher lows and higher highs, and here in the MACD we are seeing a lot of bullish momentum kicking in again here on the daily Bitcoin MACD. And another possible signal to pay attention to, which could be a possible warning signal, is of course the DXY, the US dollar index, which at the moment is actually bouncing in the short term, and perhaps this is just a bounce from oversold territories, resetting the RSI to give us some more room to the downside later on. That's a possibility, but as I discussed in more detail in my last video here on the channel, if we start to break out above this level right here, for example, sitting at around 104.5 on the DXY, then at that point, I'd potentially start to look towards a possible bullish reversal here in the DXY beginning to play out. And of course, if we end up seeing that happening, if we see the DXY start flipping more bullish, that could be a bearish signal, at least in the short term, for Bitcoin and crypto. Because as you can see on this chart right here, looking at the price of Bitcoin in the candlesticks on the daily time frame and the DXY in the red line on the same time frame, almost all the time, these two are moving in the opposite direction. They have a negative correlation. Now, it's not a perfect negative correlation. There's some time periods just in the short term where they can move in the same direction. For example, right now, just in the immediate short term, of course, we're experiencing a small bounce in the DXY while the price of Bitcoin is also pumping. But basically, if we start to see more of a bullish reversal in the DXY, once again, that could be a bearish signal for Bitcoin, as we've seen a few times so far this year. But once again, this is just talking about these short-term bearish and bullish trends, not the much larger timeframes. Once again, on the weekly chart, I'm still very bullish, as I have been since the beginning of this year. So it is important to understand the difference between the different timeframes. But once again, at least for now, this is potentially just a short-term bounce before we continue the bearish trend here in the DXY, which is why I would like to see more signals actually confirm in the DXY in order to point towards a bullish reversal. Once again, like a breakout above this level, which at least as of right now has not yet happened. And now, obviously, in the short term for the price of Bitcoin here on the 6-hour time frame, we are clearly very bullish right now with a lot of bullish momentum ever since this bullish breakout from the bullish ascending triangle pattern, which I talked about since all the way back down here at around 37 to 38,000. And as I updated in my last video here on the channel about my breakout trade, my Bitcoin long position, which I entered right down here, around this technical price target right around here, I did take a lot of profits off the table for that specific breakout trade right here, this leveraged long position. But of course, I'm still holding a lot of Bitcoin on the spot market, a lot of spot Bitcoin just in cold storage. And I also mentioned that I do have a small amount of that long position remaining open, which at the moment is basically a risk-free trade, at least for me, because I have my stop loss sitting in profits. And if you want to take Bitcoin trades just like this to maximize your profits like I have done right here, then make sure to make an account over on Bybit or Bitflex, which is where I usually trade. I usually trade over on Bybit, and I'll make sure to leave a link to Bybit in the description down below and in the pinned comment. And in fact, if you use that link down below this video, you can claim up to a $30,000 deposit bonus, but only if you use that link down below this video. And now, unfortunately, there's some countries around the world where you may not be able to access Bybit in, and so if that's the case, there is also Bitflex, which is another crypto exchange similar to Bybit, where you can take these trades, but you don't need KYC for Bitflex. And so I'll also make sure to leave a link to Bitflex in the description down below and in the pinned comment. And if you use that link to make a Bitflex account, simply deposit $100 worth of crypto or more on that account and make one trade over on Bitflex, and that can get you 10 USDT completely for free. So it's basically a 10% return on a $100 deposit. And so if you're trading crypto anyway, or if you're about to take the next trade in Bitcoin or Ethereum or any other crypto, you might as well check out those links down below this video for those extra bonuses. But anyway, getting into the Ethereum part of this video, this is on the weekly ETH to US dollar chart. And just recently, we have seen a huge breakout begin here on the weekly time frame, because so far we have already confirmed one weekly candle close above this level of resistance, which the high end of this range of resistance was sitting at around 2,150. And so technically speaking, this breakout is already now confirmed with that one weekly candle close, and only invalidates if we confirm a break back below that resistance. But of course, I was talking about this breakout even before it happened weeks ago here on the channel, due to the RSI on the weekly time frame also breaking out above resistance, which was a leading indicator for the price. But at least for now, of course, the price is still relatively close to the point of the breakout. We haven't really moved that far towards the price target, because the technical price target for this massive ascending triangle pattern for this breakout right here is sitting at around $4,300 approximately. And so from where we are right now, even after this breakout to that price target, that's still around a 90% move to the upside with zero leverage. And now, considering the fact that we only have a few more weeks to go in 2023, obviously I don't expect the price to get all the way up there this year, so it's likely we're going to see the price of ETH continue up towards that technical price target at some point during 2024. But remember, considering that is a massive move here on the chart, here on the much larger timeframes, obviously it's extremely likely that we will see some pullbacks along the way between now and then. But anyway, taking a look at the daily time frame, and of course right now, once again, we are potentially forming a bearish divergence on the daily time frame with higher highs in the price, and at least for now, we're forming lower highs in the daily Ethereum RSI. But as I've been saying in recent videos here on the channel, this potential bearish divergence is not yet confirmed, because we have not confirmed the lower high in place in the RSI. And so, like I explained earlier in the video, if the price continues pumping, this can pull the RSI further to the upside, and if we break out above this previous high in the RSI, then there's no bearish divergence. And so due to that reason, once again, this potential bearish divergence, even though it might be forming, it is not yet confirmed. So overall, we are still looking bullish in terms of the trend and momentum, especially here in the MACD, as we've recently seen a bullish cross, as I mentioned a few days ago. And just taking a quick look at the 8-hour ETH to US dollar chart, just recently the price of ETH has slightly entered into overbought territories in the 8-hour Ethereum RSI, and the last couple of times this has happened has resulted in a bit of a short-term cool-off just in the short term, either some sideways consolidation or a bit of a short-term pullback in the price of ETH. But overall, once again, we're still within the bullish trend, even if we do see a sideways consolidation or pullback. That does not necessarily end the bullish trend because we're still forming higher lows and higher highs. And obviously right now we are still in the middle of this bullish breakout, which I talked about all the way back down here, once again with a technical price target at around 24.30. And this breakout and this pattern and this bullish price target only invalidate if we see a break back below this level right here, which is sitting at around 21.20. And so once again, at least for now, I am still in my breakout long position here in the price of ETH. As you can see right here, this is my position as of right now. And personally, I have already moved my stop loss into profits. And so essentially for me, it is a risk-free trade because I entered near the point of the breakout. And so right now with the price going higher, I'm able to move my stop loss into profits. But of course, entering into a new long position at the current price after we've already pumped, already broken out, there is an increased amount of risk of possible downside if I were to enter a new long position now. But once again, nothing that I say is personal financial advice because I don't know your personal financial situation. I'm just letting you know what I usually do in these breakout situations. And once again, if you want to take these trades for yourself and maximize your profits in these moves right here, then check out Bybit or Bitflex to make an account ready to go for the next trade. And once again, you can claim those extra bonuses linked down below this video. And if you want to know how you can profit from crypto, no matter if we're bullish, bearish, or simply chopping around sideways, you can profit in either of those scenarios by watching these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is bullish or bearish using AI, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.